guys, what's up? This is Leo Cohen and I can help you achieve financial freedom through real estate investing. If you want to become a serious real estate investor, you got to do your homework. You got to do the research. Again, yes, you can talk to people, listen to their opinion, to their advice, but really you got to take the time, go to a place called Google and just type how to, what about this state, U.S. economy, and start reading. I see a big difference between the U.S. and Canada, the wealth of information and access to database and articles, it's so huge that really make it very easy for you. So my first starting point, do the research. There's not just thing too much information. Yeah, you don't have to get to the paralysis analysis, but at the same time, you really got to take the time and do your research and check and check and due diligence and check again. So once you can learn about let's pick one state. Let's take Texas, where I was actually recently featured in the Canadian Real Estate Wealth magazine, sharing my experience with other fellow investor. What was my process, why I choose Texas. Actually, this month, the Canadian Real Estate Wealth magazine did a whole study about U.S. properties. So I really encourage you guys really to go to, if you're not subscribed, go to Indigo, one of the bookstores, and get all of this magazine. If U.S. is one of your priority and you look into this, just go to that store, get a hold of this issue, and really read. So I would start learning about the state. What's the trends? What's the economy look like? Is there job growth? Are there any major corporation moving there? 500 Fortune companies. Are there any tax benefit that actually allows companies to save on taxes, to hire more people? What's the population growth? What's the net migration? Is it positive? Is it negative? Where people are moving? So all these numbers, the crime rate, the school rating, is the government investing there? There any major government project going on there? So all these turn out to be to the dollars. If you see a flow of money going to those states, that means people are moving there, which means people need a place to live. This is never ever going to change. People always need a place to live. That's the basic product for every human being, right? And if you look to the single family home, this is the lowest basic form of living everybody should need, whether it's U.S. or Canada. So after you've done your research, you've checked from different sources, article, thought leaders, then I would actually associate myself with somebody who knows the market, and actually that's his business, somebody such a developer. I mean, you're more than welcome to work with me. That's what I do for a living. I'm connected to the market 24/7. I do my research. I have qualified a list of network of developers all across the country in the states and market I believe in. So places like Atlanta, Texas, Cleveland, Kansas City. So all these places I've already checked, researched, qualified, talked to people, and the number works there. So now we're actually getting to the actual core decision of whether to invest or not. So after you have done your research, you got to look, okay, how much money do I have to invest? Let's say you have $50,000. Okay, what's the cost of average house in that market? What are the expected returns? What is the ROI? What is the return on investment? What is the cap rate? A lot of people don't know what its cap rate is, but cap rate is just a very simple formula to project the rate of return on an investment. But let's talk about real estate. So let's say you have a house cost you $50,000. The gross rent is $1,000. Monthly taxes is about $50. Insurance $50. Property management another $100. So let's say you left off with about $700 per month. You multiply that by 12, and you take that number and divide it by the value of the property. So that will give you the actual cap rate. And this number range between different states. So for example, where I purchased in Texas, Houston, the cap rate is 8%. It's some people this may sound high, some people may sound low, but really this reflects also the level of risk you're willing to take in that state, right? But what I can tell you, in a place like Texas, Houston, which actually is the #1 economy in the U.S. today, leading the country in job growth, population growth, and really economy is booming, right? So your risk is pretty low. If we go back to the subprime mortgages, Houston was hardly affected. House prices were hit there by about 30% overall, which is not that bad. But if you want a higher cap rate, like in Cleveland, you can get 12%, 13%, 15%, or Kansas City, 16%, 14%. So it's really up to your appetite and the risk tolerance you're willing to take, right? And you have to look at potential future appreciation, right? Which market, if you are buying a lower income property, most likely appreciation will not be that great. If you're buying something more expensive, there's higher chances of potential appreciation, but at the same time, you're giving up some of the percentage of the return, the ROI and the cap rate. So it's really, for everybody is different, but I would say that's a starting point. Like research, talk to people or actually operate in this market, understand. See, when you look at a state, let's say you pick up a city, right? Let's say you take Houston. Then in Houston, it's called metro statistical area, right? Which is huge. And then in that you have sub-market that actually everything is. It's like Toronto or the GTA, right? We all know that Toronto is different than Barrie, than Thornhill, Richmond Hill, Scarborough. It's really different. You really got to learn and understand your sub-market. And in those sub-market, understand where is the rental demand. Okay, which market offer the best rental demand? Reasonable, decent school system, good cash flow, preferably a neighborhood or a subdivision that there's a mix of owner-occupied and rental tenant, good property management in the area, and actually can take care of your investment. So there's lots of things you need to really consider and take in account when you're actually looking and analyzing and thinking about investment in real estate. I would say real estate is not easy, but it's pretty simple. Once you figure out there's a system behind it, once you figure out who to talk to, which market to operate, you have a strategy, you have a sound and solid plan how to achieve your goals. So I'm a very strategic person, and I would look at the end goal in mind to start with. What I'm trying to achieve. What is my outcome of this investment strategy? What do I want? Where do I want to go? Right? Okay, and then I say, what do I need to do? What is the plan to get to that goal? So if my goal is to create a replacement income of $100,000, so I'm going to ask myself, how many properties do I need to acquire to reach that level? Okay, how much finance do I need to put in place to get this place? How do I go about it? Do I have enough capital myself, or do I go align myself and do joint ventures with other people? I mean, there's so many ways to achieve your goals. People say, I have no money down, I have no money, I have no, pardon my language, guys, but this is bullshit. If there's a will, there's a way. There's so many things you can do, even if you don't have $1. You can go start wholesaling. You can actually start finding deals and sell them. You find a deal, you bring somebody to the table with the money, you mix together, you take half of the pie. So there's so many ways, so many creative ways, to make money. So the people that are really don't believe in this and feel it's not doable, these are the naysayers. These are people that really don't want to take action. They're just trying to justify themselves. They find reasons and excuses why they should not be doing this, and just when you see other people succeeding, they become envy and don't understand. They don't know where to bury themselves. That's kind of where my 2 cents. fill in the web from today and start your journey to financial freedom.